Today we are going to be looking into a strategy that claims to have a 70% win rate model. So in order to understand the strategy itself, we first need to get a grasp of what internal and external structure is. So let's get started. On the left, we have got a bullish structure. Now I want to bring your attention to this area of the diagram. Okay, so an external structure is where price has broken the previous high, creating a new high. That is your external structure. What you do then is mark out the low and the high. Anything that's in between the low and the high is internal structure. This had taken me a good number of years to understand, because oftentimes in the past I would mark out my internal highs and lows only to find out that the strategy of any kind that I implemented didn't work, because market makers, big banks, big boys, they are looking for areas where the highest liquidity points are. And in this case, it's always going to be resting under an external structural range. So that's very important for you to understand. So you can see that in between this range, we've had internal structure. And then once that internal structure broke to the downside, we had a liquidity grab and price moved up. How many of you have come across this sort of structure in the market? Let me know in the comment section. On the right hand side, we've got the exact same layout, but for a short opportunity in the market. This is where you're predicting the market is going to be going down, but you can see that the external structural range is from there to there. And the reason being is that you can see from this point on, when price broke below this low, it created a new low. When that new low formed, there was internal structure being made before the liquidity grab on the external structure before price continued to go down. So this strategy itself was shared by a channel called Pip Time, and they claim that this has a 70% win rate. So bearing this in mind, that when we utilize this strategy, we are only looking for external liquidity grab. We will ignore any internal. And this strategy works off the 1 hour time frame with a 5-minute entry point, which I'm about to share with you. So let's get rid of this and let's jump onto the 1 hour. We're going to be starting with Euro USD, and what we will do is we will split screen, come over to this little tab here and select number 2. Let's get rid of any forms of indicator or on the layout itself. Okay, and what we want to do is make sure that this side is on 5 minutes with the 1 hour on the left. And what we will do is we will completely randomize this with a replay bar. Let's randomize it. You can see, and it's brought us to 22nd of April 2022. That's absolutely fine. Let's stick to that. So straight away, what do you notice? Because your attention needs to be on this side, because if the left hand side where the structure is, if that is not on point, then you're going to lose. So I'm just going to make it a little bit bigger. Okay, and let's get the external structural range on point before we take anything else. Now externally, we started from this point to this point, and very simply we can just get rid of the middle line because we don't really need that. All we are looking for is the high and the low. So you can see straight away that throughout this period from this high to this low, price has been what? Internally ranging. You can see that. Okay. We are not interested in this. We are looking for the bigger high probability move, which happened, you can see, after taking the external range high here. And this is where you would use a 5-minute entry model. Just make that. Which would be from there, you would use a 5-minute entry model and then you execute that trade. Okay, so how does this strategy work? Very simply, you can see that the high has been taken from there and there is a low here. You can see, okay, right there. And then you can see price moving further down. You can see like this. This is the external range, high and low. And then we had an internal range there. And the price obviously fell, but this doesn't meet our entry criteria. Because the entry criteria is very simple. We are waiting for a liquidity grab of the external range, high or low. Once that happens, we would use the 5-minute entry model, which is what we're looking for. One candle that has a significant fair value gap. So what is a fair value gap? This is where the market has moved in an extreme manner, leaving these small gaps here. But in order for a fair value gap to be valid, we need to have something like this. So you can see that the fair value gap got created here, but in order for this to be fair value gap, we need another candle below, and then if price trades back into this area, that's where your fair value gap is. Okay, so let's get started and let's wait for price to either reach the high or the low. Let's see what happens. Okay, you can see price is trying to reach down to the low, and price has reached that low. You can see straight away that it's done that. Now that price has done this, we are looking for any form of fair value gap trading back to the upside. If that doesn't happen and we get a new fractal low, so you see these little dots, if we get these new fractal lows, that means that this is the confirmed low potentially. So then we would move from this area to here, but at the moment we're not, because we haven't had anything printed yet. So let's see what happens. Nothing as of yet. You can see we haven't had that. So have we got a fair value gap? No, we haven't. And where we have the traditional fair value gap, where we would mark out something like this would be your fair value gap, something like this. If this fair value gap breaks above, it then becomes an inverse fair value gap. So if you want to know more about inverse fair value gaps, how you can use them along with a normal fair value gap, there are a lot of videos out there, and if I get an opportunity to make a video on fair value gaps and you want to see that, then do let me know in the comment section. I'll be happy to make a video on that. So if I don't get any fair value gaps here, then what I can do is wait for a fair value gap for this to invert, and then I'll use this to take an entry. So let's see what happens. Okay, there you have it. We have got a fair value gap there. You see right there. So what I'm going to do is I'm going to take my entry long, put my stop loss below there, and then all I'm doing is I'm trying to trade back to the structural high here or the structural high there. So let's see what happens. Does this happen or not? What we also have to bear in mind is that we've got a little dot that's formed there. So that means that this is potentially the bottom area. So let's move this across from there to there. And what makes more sense to me is if I try to aim for this structural external high, because we can potentially have liquidity heading towards there. So now that we have decided to enter, let's see what happens. Either we get stopped out or not. So this is how pip time is teaching this strategy. You can see in terms of risk to reward, not very good. It's 1.35, but that's how it is. But sometimes you do get better risk to reward. Okay, and you can see that price is heading to the downside. There you go. Okay, so in that instant it stopped us out, and now you can see that price has done what? Has now taken this 1 hour external low, and all we're going to do now is we will aim for a fair value up to the upside there, and then once we see something like that, then we'll take that trade. Okay, and we got a fair value gap there. You can see that there. Okay, so what we will do is we will market execute there, stop losses below this low, and then we're going to aim for what? We're going to aim for that high again. And you can see it's a much better risk to reward now, isn't it? It's because we've got a 4.54 reward to risk, whereas this one wasn't that good. You could argue that price had injected itself to this fair value gap. So part of the strategy that could be tweaked is if you do see a fair value gap here, wait for it to invert and then take the trade and ignore anything here. That could be a tip moving forward. But because we've got a fair value gap here, just there, you can see right there, by me entering here, I am expecting that this fair value gap will be respected, so it will if it does come down, it will propel off and saving my stop loss. But that's just theory. Let's see what happens. And you can see that price had been ranging above this fair value gap, but we will see whether. Okay, now that's interesting, isn't it? So far so good. I'm going to get rid of this fair value gap here because it's already been filled, and we will just wait and see what price does. And you can see what's happened here. We have been stopped out. We were in a little bit of profit, but we've been stopped out. So what do we do now? We leave that as it is, and we will move this to here, because you can see that this was the last structural high to low, and then the next structural high to low was from there to there, but you can't really count that because this is internal, isn't it? Everything there, so we will ignore that. But we have got a situation where price is trying to create that new low there, so we're not gonna do anything just yet. We're gonna wait and see if we get a little dot, and then we will confirm. So far we've been stopped. Okay, now that we've confirmed, we will take a look. What can we see from this high to this low? We're waiting for the liquidity grab, and all we are doing is we need a fair value gap to be bullish, and then we aim for the up. Have we got something? Not yet. Okay, we haven't had it. Okay, we have got our fair value gap right here. You can see, got it right there. Small fair value gap, and we will aim for that stop loss, and we're aiming for this high here. So that into the reward to risk 3.53. Okay, let's see what happens. And you can see straight away we have had another loss so far. Okay, I'm going to do one more and then we will give our verdict on this particular strategy, because so far what it is showing is if it's on a strong downtrend, if you're aiming for liquidity at the lows or highs, if it's a strong downtrend, you can get stopped out a lot, and this is what's happening right now. So let's see what happens. Do we get a bullish momentum here? So far, okay. Now what do we have? We've got another structure here. Okay, we've got everything, something here, and what we're doing is just waiting for the low or the high to be taken, and then we'll decide what we want to do. Okay, so the low got taken. Any form of fair value gap, and we haven't had anything yet. Okay, so let's just rewind that because we had actually missed our entry. The fair value gap had formed over here, and we would have taken the trade stop loss below here, and then what we would do is we would aim for reward to risk from that high, and that's about 12. So that's is impressive. So no, if I take it down to the low there, it's about 10.96. Let's see what happens. And you can see straight away we got stopped out again. Not looking good so far, is it, guys? Doesn't look like a 70% win rate at all. So we are moving sideways at the moment. We haven't really created any proper structural low, so we're keeping that as it is. Okay, now what can we see? Let me just rewind that for a second. There was no fair value gaps here to take another trade, so you wouldn't really, not a decent one anyway. There is a fair value gap just about here, there to there. And what we're going to do is we're just going to go for the structural low, which is just there. I'm going to aim for the top there. That's a 5.8R. And we got stopped up. So in my opinion, as of now, you can see how many times we got stopped out. Aiming for the liquidity grab of the highs and lows, especially when it's in a very strong trending market, you're going to get absolutely pulverized, and this is what's been happening so far. So in my opinion, humble opinion, this strategy shared by Pip Time isn't really a 70% win rate. You can see we've not even won a single trade so far. So personally, this strategy itself I wouldn't use, and I would do a lot more adjustments. It could be that you might decide to do this trade on a particular session. It might be something like that where you decide to trade on a London session, and based on that you might say, okay, I'm going to only trade it at this point, and that might work, but you have to backtest. But so far, looking at this as it is, personally, it's not a very good strategy, and it's definitely not 70% win rate. So hopefully you found some value in this video. If you're not already subscribed to my video, then please do hit the sub button and notification so you don't miss out. And if you really did enjoy the video, then give it a thumbs up, and I look forward to sharing with you the next strategy that is actually promising what it says it is producing, and not just because you've done some kind of random backtest, it produced 70%, but right now it hasn't shown to be anywhere near that.